Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
That one guy clapping at the back, yeah, he's probably a Bitcoiner. All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today it's mostly going to be a little bit of crypto news, a little bit of sort of wider implications for the market, and then I'm just going to show you a couple of charts today because it's Friday. If you've been on the channel before, you'll know I don't really take on new positions over the weekend. It's not really my style. I don't really see the point in taking on weekend risk. I'm going to point to just a couple of charts and show you my thoughts for them because they are currently significant. But ultimately, I'm going to leave the TA and the trading and stuff until the weekend's video. And then over the weekend, I will do a video, as I normally do, examining the closes of the week. We have US CPI data coming out on Tuesday next week, I believe. And I think ultimately the markets are going to do a whole lot of nothing until then. So without further ado, let's get into today's episode. I want to start with some wise words here from Peter Brandt, okay? In market speculation, there's a huge difference between being right and making money. A person will only reach consistent profitability in trading when they fully understand this distinction and its implications. And a lot of people are very quick to point to things and say, well, you were wrong about that, you were right about that, whatever. That is not important. You can be right and lose money, and you can be wrong and make money. So very, very wise words here from Peter. It's not about being right or wrong. As investors and traders, we get things wrong all the time. Over in Mississippi, the state has passed a historic bill protecting Bitcoin mining. It should be legal in the state of Mississippi to run a node for the purpose of home digital asset mining and operate a digital asset mining business. So look at what is going on. There's an awful lot of FUD going around at the moment. There's the SEC suing exchanges. I think they've gone after Kraken. I think Kraken is talking about getting rid of staking. Coinbase, as I showed in yesterday or the day before's video, the CEO, Brian Armstrong, came out and said that the SEC appears to be going after staking. My 2 cents on this, and it is kind of just 2 cents, the banks are probably not happy with them offering, I don't know, 2, 3, 4, 5% yield or interest. Meanwhile, you can stake these various cryptos and get 20, 30, 40, 50% yield. My thought is that they just want to kind of stem the yield on these products. Of course, it goes without saying, or I should hope it does anyway, that if you're getting 30, 40, 50% yield on some cryptocurrency, like you're taking an enormous risk relative to putting money in the bank. But I would imagine that over time, the banks are starting to get a bit annoyed and frustrated with the fact that they can't even compete with 10, 11, 12% interest rates. But anyway, whilst all this FUD is going around, whilst the prices are currently on a little bit of a pullback, look at what I'm about to show you, okay? So first of all, we're seeing this, okay? This does not speak to Bitcoin going away or not doing well over the following year. In addition, look at this, okay? The Federal Reserve has just published a 31-page Bitcoin research report. And Bitcoin shares most of the features as a store of value such as gold, and concludes Bitcoin is unresponsive to both monetary and macroeconomic news. So does this speak to the sort of thing that says Bitcoin is dead, or Bitcoin's going to be in trouble, or the SEC are going to come after this and shut it down? No, of course not. And to be fair, none of this SEC stuff actually affects Bitcoin, does it? It's all about staking. It's all about altcoins. Like if you just buy Bitcoin and cold store it, then you're immune to all of this stuff. Over in Dubai, the leading university, CUD, now accepts Bitcoin and crypto for tuition payments in partnership with Binance. So again, look at the pattern that continues to emerge. Look at what's going on behind the FUD that you see in the mainstream media and on Twitter. At the same time, the Russian government is subsidizing Bitcoin mining in Siberia. Okay, you can see this. We're watching game theory play out right in front of our eyes. These countries, these nations are all competing for hash. Texas is adding a bunch of hash rate for the US. Russia is doing this. We're seeing China do this, even though they made it illegal, but 20% of the hash rate comes out of China. This year is going to be massive if you can just get your head around the fact that it is going to be incredibly volatile. Bitcoin Taproot adoption has breached 5% for the first time ever, as you can see here. So that's good news. I've got a video on Taproot and Taro. If you're interested, you can go and watch that in your own time. America's oldest bank, BNY Mellon, have said that Bitcoin and digital assets are here to stay. Yes, they absolutely are. And they also said that clients are absolutely interested, which of course they should be. Over in traditional finance, Biden said there'll be no recession in the US this year or next year. The reason I point to this is because I have been saying for a while now, we're going to start to see these narratives come out that there's going to be a Fed engineering a soft landing. I said we're also going to see this narrative of, oh, I think we managed to just narrowly avoid a recession. I expect CPI to come down next week, and I expect that to be a catalyst for a massive upside move in risk. I also expect that to pressure the dollar to the downside and the yields to come off. Of course, if CPI is hot next week, if it's above the prior month, then the inverse will be true. Risk will come off very, very strongly. So we'll need to be positioned for that. But for now, things continue to look constructive as far as I can tell. We're seeing these narratives emerge about avoiding a recession and having a soft landing. That's what I wanted to see if we're going to make a blow off top move, which I believe is coming. And I've got a really nice chart to show you in about 2 or 3 tabs time. Here's the DAX. Underway. We've had the breakout. We've had the golden cross on the MAs. We have had the back test of these MAs. We're now moving above the neckline. And now we're in the final extension period for the DAX. This is just lagging a little bit behind the FTSE 100, which has already completed this move. The FTSE 100 continues to make all-time highs. Meanwhile, insiders are not buying into this rally. Corporate insider buying is now at extremely low levels. So either that means they're already positioned or they don't trust this rally. I would argue that since there was massively elevated levels of insider buying right around the lows back here, I would make the argument that they're likely already in position. But maybe I'm wrong about that. That remains to be seen. This is the chart I really wanted to show you. Look at this, okay? This is the Dow Jones Transportation Average 2008 versus 2023. We're on the top of the Bollinger Band in a very strong rally like April 2008. It seems we haven't escaped this scenario. So if I click onto 2008 first, notice what happened. We made the all-time high. We entered this big bear market, 1, 2, 3 peaks before having a pullback and then going on to set a new all-time high very, very quickly. And then we went into this great financial crisis. So what does today look like? Almost exactly the same. We set this all-time high. We have these 3 drives higher with successively lower highs. We've had the pullback, and now we are starting to push to the upside. So if I hop back into this 2008 chart, you'll see we should be right about here, just about to put in this final blow off top move. Of course, it can change and it can change quickly, but I still believe things look quite constructive, and this still remains my primary expectation that we will come up and set a higher high over the next couple of months, say 3 to 6 months. And then I think it's time to have that giant recession and deflationary bust that everyone thinks is imminent and everyone has been calling for, frankly, since this high back here. So as I said at the start, I'm not going to spend too much time on the charts because I just wanted to show you a couple of updates that are significant. And outside of that, I'm not really too fussed about the charts until we see the closes. And even then, I think Monday, we need to get Monday out of the way and Tuesday till we see the CPI print. And then I think we'll have true direction for the markets. So here's the dollar. Is it a bull flag before a move higher? Is it about to roll over and set a new low? That, of course, remains to be seen. Again, we'll have to wait for CPI on Tuesday, I believe. The yields are looking to break out on the 10-year yield. So is this going to be the thing I've been talking about, which is the bull trap followed by a swift reversal? Again, we need to see CPI, and the same is true of the 2-year yield, although at the moment, this to me looks more bullish than bearish. Geo, I've been talking about Geo for a long time, chopping around inside this box and then getting a breakout above the top of this box. So that is what I'm looking for. If that was to happen today on a closing basis, I will add a position here. The stop loss has already been moved to here. So although I don't like to take weekend risk, although I don't like to take on additional positions on a Friday, I have been calling this out since, I don't know, probably since back here. Okay, probably around 7 to 8 weeks. So if that's going to happen today, expect me to tell you that I added a position to Geo. Here's XLC. Okay, you can see we're right into trendline support here. So if we lose this level, then that is going to be a very, very early warning sign. Technically speaking, the trade would still be valid all the way down to retest this orange line that we broke out from. But I think if we lose this level, I'll probably close this position and start to reduce a little bit of equity exposure. We can always add it back if we get a break of this, I'll color it red so you can be sure, this red downward sloping resistance line here. The last couple of things I wanted to point out are the VIX, okay? We drew this line yesterday, we broke out convincingly, closed on a daily basis, so the hedge has to go on. Now, to be completely honest, if CPI next week is hot, if it's above the month before, then expect a volatility event, and that's what this hedge is for. But if I'm being completely honest here, I expect CPI to be lower, I expect it to be significantly lower, and if that is to happen, then this will turn out to be a swift reversal. I'll have to pay a stop on this, which is fine because this is only an insurance policy, remember? And you don't insure your car and then get disappointed when you don't crash it and claim on the insurance, right? As I always say when I put these hedges on. But the hedge had to be respected. We are hedged in case CPI is hot or in case we get some big stock market meltdown, then this will cover the equity exposure losses. But for now, what I expect to see is a whole lot of basically nothing into Monday and Tuesday, then this probably roll over very swiftly as the CPI is lower. Of course, I'm open to being proven wrong, and that is demonstrated and illustrated here by this VIX hedge being put on. In terms of the US equities, look, still sideways in the Dow, nothing else to say about that. The NASDAQ is right into trendline support, as you can see. So I think all the while we're above this high from back here, this one here. I don't think there's any reason to worry. Do I expect this to be violated today or even Monday and Tuesday? Quite possibly. I wouldn't be surprised to see this come all the way back down to sort of 12,000. So from here, I just wanted to point out there's a couple of ways you can handle this. You can either take the trade off on a breakdown of this and then re-enter on a breakout of this green downward sloping resistance line, this bull flag type look you've got going on. Or you could hold this through to CPI and then see what CPI says. Of course, you'll be taking a lot more risk from that, and there's no saying that with CPI won't be hot and then we'll end up getting wrecked on that. But that's what stop losses are for. So it's entirely up to you how you want to play that. The S&P 500, we've got a slightly different situation going on. We've got, okay, a violation of this orange line, upward sloping, which is, to be honest, quite steep. So you can respect the risk here and re-enter on a bull flag break of this purple sloping resistance line here. If you prefer, you can play this a bit more conservative and you could draw a trend line like this. So maybe this one's going to hold here. I know this is starting to get messy, just bear with me. So maybe this will hold and then we can go into next week after the CPI and see what happens from there. If you wanted to give this trade the maximum amount of room possible, then all the while we're above this red line, there's no real sell impulse from me. So that's the three ways of playing it. Obviously, if you're the type of trader that likes to hop in and out a lot, then you'll want to respect this breakdown and buy a bull flag breakout as shown by this purple slope here. If you want to give it a bit more wiggle room to see you through the CPI data next week, then perhaps this is your line in the sand, this purple one here. Personally, I wouldn't want to be anywhere near longs if we lose this red upward sloping support line here. So it's entirely up to you. That's my thoughts on everything else. I'm going to sit tight with my positions and see what happens. I will do a full deep dive technical analysis breakdown for the closes after today's session, and I will post that over the weekend. In the meantime, I think it's about staying calm, making sure you're not zoomed in too close on the charts. Again, I say this before, I'll say it again. You don't want to be sat here, right, looking at volatility and looking at these charts from in here. You don't want to be doing this and winding yourself up, okay? Keep your perspective, keep a nice zoomed out look so you can see what's going on. Stay calm, manage risk. Remember, there's nothing wrong with taking your trade off on a trend line breakdown like we've got with the NASDAQ. We lose this, there's nothing wrong with taking it off and then sitting on the sidelines and waiting to see if we break that. Because there's also nothing to say if we do lose this upward sloping support line. There's nothing to say we won't do this, right? So each to their own, but know your levels and respect your levels. Stick with your strategy. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe and turn the notifications on if you want to continue to get updates on all of these markets in real time. As I said, do a full deep dive technical analysis examining the closes for the week over the weekend. So make sure you stay tuned for that and enjoy your weekend. Until next time, take care from me. All the best. Cheers. Bye.